Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about where we stand in the market right now, some of the bearish things that we can look at that might suggest that we're about to roll over and head back down soon, and also some of the bullish factors that might suggest that this rally can actually continue longer. So let's go ahead and get into it. So, obviously crypto has been having a very explosive rally, at least so far. Basically the month of January was incredibly positive for Bitcoin and the rest of the crypto space. But now we've kind of been, consolidating up at this higher range, kind of the 23, 22K kind of range. And now the question that a lot of people are asking is this, the local top up here at about 24.2K, and are we now about to roll over and go back down? And some people calling for us to just resume the bear market, continue going lower, or might we be able to actually continue on with this rally? So as I mentioned before, let's start with the bearish case, some bearish things we can look at. Well, one thing that we can look at that's just very kind of clear, if we just pull up the relative strength index, the RSI, which is a momentum indicator, one thing you'll notice is this very clear kind of bearish divergence where we had the highest RSI rating here at about 89 back here towards the end of January 14th, this candle right here. And then even though price went on to set a higher high relative to that point, you see the RSI actually setting in a lower high relative to that point. And that's what's called a bearish divergence. It's this idea that even though price is moving up, the momentum is lower on those subsequent pushes up. And that can oftentimes precede reversals back down to the downside. Not always, obviously, RSI divergences, they're things that you can look back in history and then you'll see them and say, oh, it's obvious. But then, it very well could be the case that we could just go rallying offwards and this would not play out. So you always have to take these divergences with a grain of salt. But certainly it's a point towards the bears, right? If we're seeing a bearish divergence, these can mark the tops of rallies, something to keep in mind. So that's just a technical point to keep in mind here. Now, another point that I wanted to talk about, and this is something I actually mentioned when I made a video all the way back here in early January, where I said that the conditions were there for some kind of a rally like this to take place. One of the pieces of data I pointed to in that video was that if we did see that rally, which we ended up seeing, to watch the levels basically where we are right now as being a level where we might encounter a lot of resistance. We might bump our head and get rejected. And this data that I'm showing you here is on-chain data. So this is basically showing you the distribution of cost bases across the Bitcoin network by price. So realized price is the price at which a Bitcoin is spent. Whoever then bought that Bitcoin, that was their cost basis. They bought it at that price. This is how many Bitcoin basically have their cost bases at a given price point. What you can see is that if I exclude some of the shorter term ones, so basically anything under a month, or actually anything under 3 months, which tend to just be very quick in and out, a lot of spending that happens, not all that useful, and look more at the longer term held Bitcoin, so 3 months onwards, what we can see is that there are a lot of people who've been holding Bitcoin for more than 3 months in the kind of price levels that we are now. So we have actually cleared above some of these resistance points. We got above 19K, got above 20, got above 21, but now right around where we are, around 23K, is this last kind of spike. And this seems to be what's acting as resistance right now. Now, the good news, for the bulls is that if we can clear this level and really break out above it, there's really not a whole lot going on in terms of cost basis above that. And the reason that we care about this is that cost bases can act as resistance when you come back to them. Because you have to put yourself in the mindset of someone who bought this, 3+ months ago. They bought Bitcoin thinking they were buying it at a pretty attractive price. They then saw the price collapse down to 15.5K. They've now seen Bitcoin rally back up to their cost basis, specifically these people here. So maybe the determination they're making is, well, I'm just going to get out at break even. I'm not going to risk watching Bitcoin fall back down to 15K or lower. I might as well just get my money back while I can, sell out. So there could be some selling pressure getting added by people in these groups here. And additionally, there could be some people here who are deciding to just cash out with some slight profit, seeing things slow down and, more or less break even, with a slight profit. So generally speaking, there might be a lot of people who are looking at this as a way of just getting out now and being safe. But, again, with the bull case, if you can really break above this, these people might then change their mind. They might say, oh, this rally actually has legs. Maybe I'll wait for these higher prices before cashing out, kind of capture some of that profit. And so that's where you might see price really jump through these levels quite quickly if we can do that. And the next level you'd be looking at is, 29K up into the 30K kind of range for that kind of cost basis based resistance. It's not the only thing that leads to resistance, but it is one factor that can contribute to it. So if you're looking at the bear case, you'd say this resistance is going to hold. We're going to get rejected here. We're going to fall back down. This is just a big bull trap that we've been seeing. And I did talk in that earlier video about how that is a possibility we would want to be keeping an eye on as we get here. And so this is kind of that critical moment. We're up at those levels. You know, if we get a clear rejection off of it, then that's just like exactly likely to be what it is. But if we can continue to break off through it, then we actually might be able to go and set up to these higher levels, you know, up over here. Time will tell, but that's an important thing to keep in mind. So really it kind of depends on your outlook. If you think that a bearish outlook is more reasonable, then this is probably a very, very bearish sign. Doing more bullish, you might think that we have a reasonable chance to get through here, in which case, you know, selling here might lose the opportunity to sell up at these higher levels. So obviously that's up to you to make that determination of which side you'd fall on. Just one factor to keep in mind, in my opinion. Now, some other things we can look at, you know, for the kind of more bearish outlook from the more macro perspective is just looking at what's going on in the stock market and other kind of more macro factors. So this is the S&P 500 I'm showing here. One of the things that's been notable about the stock market is that the S&P 500, you'll see, broke out of this long-term descending resistance line. It had been bouncing off of this entire, you know, bear market so far. It broke above it here in January, really kind of cleared up above it, and now it's correcting. And so what you might be looking for in the stock market is for this to be more than just a minor correction, and actually for it to plunge us down deeper. That if this was really the thrust of the stock market, kind of leading things up and then probably allowing things like crypto to rally as well, this really risk-on appetite, start seeing the stock market fall off a cliff, you probably expect crypto to fall along with it. And so, you know, there are a lot of stock market bears who are out there, you know, people who say the stock market is way too expensive right now, that a recession is coming, and that, you know, prices need to fall way lower before they can find a bottom. If you buy into that narrative, then if you see this continuing, that would just be a sign for the bears, suggesting that price could go down further. So that's something to keep an eye on and to watch. And especially if we fall down, you know, break back down below here, we break below the 200-day moving average again, you know, and come back down here into a more bearish stance, I think that kind of thing playing out is definitely in the cards. So something to keep in mind. It's obviously early now, you know, those things haven't happened yet, but those are the kind of things that if you think that's likely, then that's probably going to be a very bearish factor for Bitcoin and the rest of crypto. And the final thing that I want to talk about here from the macro perspective, just what the dollar has been doing the last several days. You can see it's just been exploding to the upside. And this is important because this is the DXY. It's the strength of the dollar relative to a basket of other currencies. And generally speaking, when the dollar is doing well, crypto is doing terrible. You can see in 2022, the entirety of 2022, the dollar was more or less going parabolic. Crypto was getting absolutely destroyed during that period. But then as we transitioned, you know, into this new year, especially through here, as the dollar has been falling off a cliff, then crypto has been able to see some upside. And generally speaking, risk assets, you know, the stock market has really been able to move up while the dollar is moving down. And so if we see a reversal on the dollar, if this is really a sign of momentum to push us back into an uptrend on the dollar, that could put negative pressure on risk assets, crypto included, which could then mark the end of this Bitcoin rally and frankly the broader crypto rally as well. So that's something that's going to be important to watch. Is this just, you know, a blip that rolls over and falls back down on the dollar, which would be bullish for crypto, or is this going to be a more sustained rally, which would be quite bearish? You know, you expect to see further downside just like we did in 2022, most likely. So obviously it's up to you to make that determination, but it is something that's important to watch. And there's been an awful lot of momentum in the dollar so far these last few days. It'll be concerning if that keeps continuing if you are bullish on crypto. That would be a concerning sign. And then another factor we can look at that is, you know, potentially concerning is what's going on with momentum in crypto. So I'm showing you here a chart from our website that we recently launched in collaboration with Jay over at Daily Crypto Analysis. And so this is showing you the momentum bias indicator. So this is just a historical chart, the momentum bias indicator here on our workbench. And the momentum bias indicator, as the name suggests, looks at momentum in the market. Is the momentum biased to the upside or biased to the downside? So above zero is upside biased, below zero is downside biased. And you'll notice that we really broke definitively up above zero in this rally for Bitcoin here, really shooting up really to levels that we only see in these kind of early stages of reversals out of bear markets into bullish footing. I've talked about this in previous videos. You'll note that getting to this level, we did it here, we did it here, and obviously in 2019 we did it. And it's oftentimes marked those kind of transitions out of bear market patterns into bull market. So you could say that that's a point for the bulls, absolutely is possible. But we're also noticing, at least for more short-term kind of bearish outlook, is that we are rolling over here, right? Even though price is kind of plateauing here, you see momentum is starting to roll over and fall. And this is exactly what we see in these prior times as well, where you'll have this big surge up, you'll roll over on momentum, and that tends to lead to some kind of a correction, at least in the short term, even if it's the start of a broader, more bullish footing. And so we're just looking at that here, looking at that here. Now, the one thing, and even in 2019, you got some correction when you get these rollovers in momentum. Now, obviously, 2019 would be a bit of the exception, where here is pretty minor corrections, which ultimately lead into much bigger movements. That would really be up to you to decide, even if we are assuming we're doing something like we did back here, how big this correction could be. Now, the more bearish outlook of this, though, I think all of those considerations I was just talking about, even if we do see a decent-sized correction like we have seen in the past, is still bullish on net, because it means we're re-entering a more bullish phase in the market rather than just more downside coming. I think the more downside or bearish kind of interpretation of this is that this rollover is going to look something like this, or something like this, or something like this, where we try to reestablish positive momentum, we fail, we roll over, and then we go and set new lows. Now, this time would be a bit different, because in those past examples, we've never gotten as extended on the MBI before rolling over like that, right? Usually when that happens, you're only getting a little bit above zero before you roll over and fall off. We'll see that, in these prior examples, back from these prior bear markets. You're only getting a bit above, you roll over. Only a bit above, you roll over. A bit above, roll over. This would be a bit of an anomaly if we end up just going right back to the bear market after this big explosion of momentum. It would be a first time. There's a first time for everything, but it would be a first time, so that's something to keep in mind. But that's a more extreme bearish outlook. And so I think for that to be confirmed, in my view, what we need to see is momentum break back down below zero more definitively. If we see that, and especially then if we start tracking into some of these territories back over here, that would obviously confirm it, although of course at that point price has already fallen off a cliff anyway, so that's maybe a little bit too late. But if we go and start clearing down into these more deep negatives down here, and especially if we don't kind of catch a bottom down there, that might look more like a continuation of a bear market like we saw here, so for example, here we kind of more or less just fell off a cliff. Here we just more or less, kind of sideways down, stayed negative, and then fell off a cliff. Here just fell off a cliff. If that kind of behavior starts forming again, look out below potentially. So that's just something to keep in mind. So I think there are both bullish and bearish takes you can make from this chart. And it's really kind of depending on if you think we're going to do something more like, for example, 2019, or if we're just kind of one of these stages where there's going to be some at least appreciable downside, or the more bearish case, something like over here. So let's flip over now to the bullish case. So that's, I think, kind of a nice pivot where we can see kind of both in this chart. Let's go ahead and flip over to more the bullish side and just talk about some things that we can look at. So here's the dashboard view on our website. Again, polaritydigital.io. We'll leave a link to that in the description. Totally free to access during this kind of beta phase where we're kind of just working on the site, making improvements, adding new things. And so definitely encourage you to go check it out for yourself, take a look around. The dashboard is really useful because it has all the current levels for all the different assets that we're currently monitoring, and the current levels of all the different indicators that we have here in the channel. The UDPIs, our upside downside potential indicator, our risk type of model that we have here, momentum biasing indicator we were just talking about, trend confidence indicator, and then the momentum or the market direction classifier as well, the critical level that it needs to stay above to be bullish. If it's below, then that's bearish. I want to talk a little bit about risk here. I want to talk specifically about the short-term UDPI, which is one that we've been following quite closely during this rally. Because again, if you're kind of talking about short-term things, the short-term UDPI makes the most sense to be talking about here. So I'm going to go ahead and sort it so that we can see the lowest UDPI levels from kind of lowest level there is all the way down to the highest. Now, one of the things you'll notice is that we're getting kind of to roughly equal in terms of the number that are below zero, which is kind of that neutral point of relative upside versus downside potential that's plausible, kind of now equal the number of assets that sit below zero and the ones that sit above zero. And this is notable because not too long ago, we were in a situation where the majority of assets, I think it was around 60 to 70% of the assets we're following, were above zero on the short-term UDPI, which was saying that in the short term, the market was potentially getting to be a bit extended, kind of in a broader sense, not just looking at one asset, not just looking at Bitcoin, but across a swath of different assets, the majority were starting to get a little bit overheated, especially from what you'd expect kind of coming out of a really bearish place that we were just into this kind of a rally. And now what we're seeing is a bit of a reset. We're seeing risk start to fall, the short-term UDPI start to fall kind of across the board for a lot of these different assets. So for example, if I pull up the chart of the short-term UDPI for Bitcoin here, we can see that risk has really rolled over. It started to roll over pretty quickly. You know, the high happened back here at the end of January 29th. We're now rolling back over pretty decisively. Ethereum, same thing. We kind of rallied up around the same time. We hit our peak in risk, and now we're rolling back over. And what that means is that basically the short-term UDPI is saying that the risk in Bitcoin, the risk in ETH is actually now lower than it was just a few weeks ago. And that tends to happen in these kind of rallies. So for example, go back to Bitcoin, look at 2019. You'll see this happen a lot where risk really shoots up, cools off, shoots up, cools off, shoots up again. It's kind of resetting of risk before the asset can continue on the rally. So if you're asking the question, does right now look like 2019? Well, it might if we start seeing some of that behavior, specifically if we see something like what happened here, where we get this initial top kind of at a roughly similar level we were right now. We cool off, and we might have to cool off further to be analogous to this. We cool off for a bit, you know, things kind of go sideways, maybe slightly down, a bit of a correction. And then we might see that next big impulse that pushes the market up, risk gets extended again, and then, you know, maybe that points to the actual top of the rally. And so if it would be 2019 again, we might correct. But again, you know, that's just an example. It's guaranteed to not play out the exact same way as 2019. But if history rhymes, you know, you might look for some kind of a pattern sort of like this. And so certainly we are seeing risk start to cool off. Now, again, just to point out the bearish case, because of course there's always a bearish case, you could say that, you know, what if it's just like this, where we had this rally up, it rolled over, then we just went, you know, collapsing all the way down to the bear market low. Certainly possible. You know, this could be the top and we end up rolling over. Totally possible. But I did just want to point this out. And so if kind of the position that you have with the market is that you think more upside is to come, this is exactly what you'd expect to happen based on what we saw. We kind of got a bit overextended. We expect risk to start cooling off, but then at some point we're going to find a bottom and we might go ahead and shoot back up again. And if history is any indication, looking at something like 2019, we might actually be looking at going down fairly far into the negatives again before we actually set that next rally up. So even if we go ahead and dip quite deep down in here, you know, down into the negative ones, etc., that might be fine. You know, that might just be setting us up for that next leg in the market. And so that's where I think that watching things like the stock market, watching things like the dollar, might give us some indication of whether or not that bullish case is really the base case or the bearish case is. If we see the dollar roll over and then we see risk continuing to reset, that might be an indication that, you know, we're just in a consolidation before a continuation is plausible. So something to keep in mind. Obviously not financial advice, just one of the things that I'm watching here. Now, another thing I want to talk about is some more on-chain data with Bitcoin, specifically looking at the different realized prices or kind of the cost bases that exist on the network. So here is the realized cap versus market cap. So this is just basically kind of the realized value, kind of realized market cap, the cost basis versus what the actual market cap of Bitcoin is. And so, you know, realized cap is analogous to realized price, which you might have heard of. And you see that we had dipped quite, deeply below it back here in November. We've now broke back above it. Now, you know, we did do that back here, and then we got, you know, rejected, went back down. But it is notable because in the past, oftentimes when you can clear above the realized cap or realized price, that can lead to some pretty nice momentum to the upside. And especially if you can get above it and stay above it for a while, that tends to indicate that you're back into a bullish footing rather than a bearish footing. So that's one thing to keep in mind. We've broken above it. Watch for continuation. If we can stay above here, and especially let's say we do correct, but then we hold it as support, or we don't even go back down to it, that would be a bullish sign in my opinion. And you know, the stage is set for something like that to possibly happen. We'd also look at the long-term holder realized price, which is the realized price specifically amongst long-term holders, people who've been holding Bitcoin for more than, I think it's generally defined as about 145, 155 days, somewhere in that ballpark. And so you can see is that more recently we have been flirting with the long-term holder realized price for a while. It started kind of when we fell below, it started acting as resistance, fell back below. Now we've decisively chopped up through it. And what that might mean is that in the future, if we do have a correction, maybe it can actually act as support again, like it did back here, instead of as resistance like it did back through here. And again, cost bases are important because it's a psychologically important level. The closer you are to your cost basis, the more you psychologically feel the price movements near it. And so if we're coming back down to it, maybe long-term holders will start stepping in to defend their cost basis. And so that's what we'd like to see for the bullish case. You'd much rather be above the long-term holder realized price where they maybe will step in to defend it than below it where they might sell to get to break even, kind of on aggregate of all those people. And the final thing I want to talk about here with this on-chain data was just the short-term holder realized price. So this is people who have been holding Bitcoin for the shorter duration, less than 140, 155 days, depending on how it's defined. And you can see that this often acts as support during bullish phases and resistance during bearish phases. You can see in 2019, we got rejected off it twice and then, fell down to newer lows both times. Now we have sliced up above it. So again, here's one of the points we got rejected off of it. We now have sliced back above it in this more recent time. And again, what we might look for then is that if price does correct from here, can we hold it as support? If we do, that would be a bullish sign suggesting that more bullish movement is plausible, at least in the shorter term. Because again, if we look back at some of these kind of examples from history, especially if we look back over here in 2016, 2017, once we really cleared above it, there were multiple times we got back down and we tested it and then we bounced off of it every time, leading into that massive rally that we saw into 2017. Now, no guarantee we'd see that huge rally, but certainly any possibility of that happening, it would be nice to see us be able to start holding as support. So I wouldn't be shocked if, at some time in the not too distant future, we do go back down and test the short-term holder realized price. And, by the time we do it, it probably will have raised above it, back up above. Wouldn't be surprised, if it gets up into the 20, 21K range, maybe by the time we go ahead and do it, although we might do it sooner. But then you'd really be looking for how do we interact with that level. If we just slice down below it like we did over here, that would be a really bad sign suggesting that more downside is likely to follow. If we can hold it as support, that might be a bullish sign if history is any indication of the future. So that's kind of the outlook that I have on the market. I think we're kind of at a critical level right now for Bitcoin. I think it could plausibly go either way. And that's why I wanted to lay out both cases, let you decide for yourself which one you think is more plausible. I think we've seen a pretty impressive rally in crypto. And so it would not shock me if a lot of participants just decide, you know what, I'm going to lock in some profits here just to play it safe. And that adds to selling pressure and brings things back down. But at the same time, there's also a lot of disbelief in the market with this rally. A lot of people saying, why is this happening? Crypto should be dead right now. I'm going to short the hell out of it the first second I get. And so you might end up seeing, more short squeezes coming out of this if a lot of people say, all right, here it is. This is the local top. Short the heck out of it. Ride that short all the way back down into this level here. And so that's where, kind of my outlook is relatively neutral right now. I don't have a super strong feeling one way or the other. I think that, if I had to pick one way or the other, I personally lean maybe a little bit more on the bullish side just because I think the stock market might have more rallying to go on this kind of soft landing, Fed is soon going to be pausing type of narrative. So there might be some chop along the way, but I think that up might be, at least for the kind of medium term, the path of less resistance than down, which then could lead to crypto being able to kind of continue this rally, maybe reach back up to around the 30K range or something like that before we fall off. But that's, a very lightly held view. And I'm very much open-minded. So if the data starts pointing decisively in the bearish case, my outlook is going to change along with the data. And, in my personal opinion, that's the way to navigate these markets, is that when you get too confident in anything, it can lead you astray when you think that, the market has to rally up to 40K. Does it have to do that? Or, the market has, Bitcoin has to collapse down to 10K. Really? Does it have to do that? What is the data telling us? And that's what I'm going to be looking for. So obviously none of this is financial advice. Form your own opinions. But those are some of the things that I'm looking at the market right now to think about if we should be going up or if down is plausible. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember to go check out Polarity Digital. We have a lot of useful tools and information over there. Again, polaritydigital.io, link in the description.